if you've started investing over the last 3 years, you have likely been influenced by a number of different economic conditions. These have all been born out of things such as COVID, rising inflation, the US debt crisis, which almost saw the US shut down for a period of time, Brexit, the cost of living crisis, and the rising interest rates that the governments have put out to try to combat rising inflation. While most or all of this is perfectly normal to happen over a period of time, to have it all happen within a 3-year period is unusual, and that has seen the markets do some pretty funky things throughout that period of time. We saw a flash crash around when COVID kind of reared its ugly head, which ended the 13-year bull run that we'd seen since the global financial crisis way back in 2009. We then saw a V-shaped recovery where markets seemed to, for no real reason, grow exponentially throughout a period of global uncertainty, which I guess was due to money printing and people having stimulus in America, and the furlough scheme within the United Kingdom, which at the time was really, really important. But now in hindsight, perhaps things could have been handled slightly differently. Of course, we've then seen the effects of the strategies that we implemented throughout the COVID period of time, which has caused massive inflation within the United Kingdom, within the US, and most of the developed world's markets. Who knows what's to come around the corner? Definitely not me. But it is an interesting opportunity to hop in and have a look at my trading 212 portfolio, an account where I hold around 30% of my overall invested cash, which is invested in individual stocks and shares and some very, very small ETFs, which essentially supplements my Vanguard portfolio, which is where I hold the lion's share of my wealth, and the Coinbase portfolio that I hold, which is around 5% of my overall invested capital. So without further ado, let's hop in and have a look at exactly where my portfolio is at on Trading 212 right at this moment in time, and go from there. Let's hop in. So if you hop into my portfolio, you can see that my portfolio is currently valued at £5,471, but the total account value is actually at £5,523.14. And that's because I've actually got cash at the moment that's sat on the side, which is in the process of being invested as soon as the US markets open. It's also worth mentioning that the UK market opened about an hour ago, so there will be some fluctuations throughout the video, but we'll kind of round it all up at the very end. If you look at my portfolio as actually invested right now, my return is around £1,200, or around 28%. Now, that only accounts for the cash that is actually invested in the portfolio at this moment in time. It doesn't take into account any dividends that I've been received. It doesn't take into account any money that I've gained or lost from buying or selling investments within this portfolio. So at the very end of the video, what we'll do is we'll hop across to my overall investment tracker, and we'll look at my actual cash on cash return on investment for this portfolio. If we look back over the last 3 months, you can see that the last 3 months have actually been, as we spoke about in my Vanguard update, fairly positive for the market. With me, yes, investing a little bit of cash as shown in the dotted line along here, but investments have grown substantially from an 18% return all the way up to the 28% return that we see now. And it's netted me around a £500, £450, £500 in actual real growth. My allocation and weighting sits over here on the right hand side. Currently holds 17 investments, largely within the United States, but there are some UK companies involved there as well. So Tesla makes up the lion's share of my portfolio, and that's largely due to the growth that it's seen of late. We've got Apple, Microsoft, Alphabet, Nvidia are my top 5, and then the rest of them here sitting just outside. But we'll hop across and have a look at actually what's happening to these investments in real terms. So we've got Alphabet first. I currently hold just over 4 shares in the company, valued at £414.60, currently up around 22.5%, or £76.32. And you can see here over the last 3 months, we're up 20.3%. We've got Amazon, and I hold around 3 3/4 shares in this company, with a value of £379. I'm pretty much breaking even in Amazon at the moment. As we can see, over the last 3 months, it's up 17%. But over the last year, it's not really done a whole lot. It's up 6.3% over the last year. But if we look back over a bigger picture, you can see that since an all-time high back in November 21, it's still got quite a way to make up there. It's still down around 25% from its all-time high. Apple has done really, really well for me. I hold 3.3 shares in the company with a value of just under £500 at the moment. It's returned to me a whopping £168, and I'm up around 60% in this investment since starting this portfolio. Over the last 3 months, we're up around 15%. Over the last year, we're up at 23%. So Apple is a real staple of most people's portfolios, I think. And it's a company that will 100% still be here in 10, 15 years. Everyone's using Apple phones, everyone's using Apple devices. If you want the best kind of computing software, you buy an Apple Mac. Apple is one of those staple companies that I can't see going anywhere. AT&T, a company that everybody used to hold for dividends, it's not done particularly well over the last year. I hold 9.5 shares in this company with a total value of just £107. I've lost £100 in this position, almost down 50%, which isn't too tasty. Over the last year, we're down 21%. The dividend, if we scroll down, still sits at 7.5%. But it's at that point now where we've got to question the capital gains. Is the loss that I'm making worth a dividend? Probably not. Over the last 3 months, we're down 17% again. It's not really looking too good for AT&T. Since the COVID, it's just not really recovered and it's continued to fall. So again, as I've said previously in videos, this is one that I'm considering. I'm on the fence now of actually selling out or just cutting my losses. But we'll pick up on that in the future. BAE Systems, as we said, has done particularly well out of the Ukraine crisis. Of course, this is a defensive stock. Over the last year, it's up 19%. Last 3 months, it's actually fallen a little bit. I hold 26, almost 27 shares in this company, a value of £250 at present, and I've actually returned £122, which is fantastic. Coca-Cola, I hold 6.5 shares in the company, a value of £322. I'm up £58 at the moment, or 21.5%. Coca-Cola, again, not really done a whole lot over the last year, which is kind of what you'd expect from a company like Coca-Cola. It's fairly stable. It's gone through its massive growth period. It's a dividend payer now. You can see I'm investing another £40 when the market opens today. Pays a dividend of around 3%. We're not expecting massive capital growth from a company like this. It's more the dividend payment that we're receiving over time. The iShares Global Clean Energy, I hold 39 shares in this ETF with a value of £321. Actually down 8%, or losing around £28.50. I invest in this because I strongly believe in clean energy and believe that it has to take hold as soon as possible to essentially try to reduce the impact on the climate. I'm a big believer that some of the events we've seen, for example, the wildfires in Greece and the temperatures that we've seen in Europe this year, are largely down to obviously climate change, and that is impacted by fossil fuels, by global warming, due to the burning of oil, gas, and not using clean energy. So I invest in this position because I think that it has to do well. Johnson & Johnson, I hold 2 shares in the company with a value at the moment of £282, up £32 or 12.79%. We've then got Microsoft, which over the last year has done exceptionally, up 23%. I hold 1.82 shares in the company with a value at this moment in time of £470. Returned to me £120, which is up 34% since holding this investment position. Nvidia, which is now actually outclassing Tesla in terms of return for me, has done exceptionally over the last year, up 158%. You'd be argued to think that we should probably sell out of this position at this moment in time. Over the last 3 months, it's up another 70%, which is exceptional. I currently hold 1.06 shares in this company with a value of £381. It's returned to me £206 or 117.73%. Really, really exceptional. And if you look at pre-market trading, it's up another 1% today, which is another $5 into my portfolio. So bonza. A nice little dividend as well from Nvidia. Well, I say a little dividend, it is the smallest dividend that I receive in my portfolio. It throws me a penny or two every quarter, which is nice, I guess. Pfizer, the COVID company, or the company did really well off the back of COVID, and since then it's slumped. In hindsight, I should probably have sold when it was at its all-time high, or near it enough its all-time high of around $60 per share. I didn't. I decided to hold on to it for the dividend, which again, hindsight is a wonderful thing, isn't it? I hold 4.8 shares of this company with a value of £136. Lost £5 in this position now, with a return of around -4%. But if you take into account the dividend that I've received, we're more than breaking even. We're actually positive within this investment. Realty Income, another great dividend payer. I hold just under 7 shares in this company with a value of £336. Breaking even, again, it had done particularly well. You can see it's got a stepped approach, really. It fell after COVID. It fell again kind of off the back of interest rate rises in the US. Of course, interest rates, mortgage rates affect companies like Realty Income, who are in real estate for large companies. So it's currently returned to me £4.25 or 1.25%, 28%, sorry. But a dividend which consistently comes in every single month of around £1.20, making me around £14 to £15 per year in just dividend return, which isn't too bad at all. Rio Tinto, I hold just over 4.5 shares in this company with a value of £239. Again, breaking even for me pretty much. And you can see, as with lots of mining companies, it swings back and forth fairly regularly, and you can see this historically within this company. Dividend at the moment of just over 6%. It's returned to me around 2%, so not really much more to say on that. Shell, a large oil company, up 22% so far this year. Of course, because I bought Shell before it changed from Royal Dutch Shell to Shell, I don't really see much information here, which is a little frustrating. I just see the actual investment amount that I've got here. Starbucks, breaking even for me. I hold just over 2 3/4 shares in this company. So far this year, it is up 21% again. So lots of the companies in the US and the world actually have done very, very well so far this year, which is really quite nice to see. So Starbucks, again, I'm pretty much breaking even here, a total value of £225, and I'm up 0.02% or 4p, which is not really much at all. Tesla, doing Tesla things as usual. Over the last year, it's down 7%. Over the last 3 months, it's up 60%. So just one of them with Tesla, really, isn't it? I hold 3.42 shares in the company with a total value of £682. I'm up £264 or 63%. And the final company in my overall portfolio is Unilever. Over the last year, we're up 6%, and my position, I hold 4 units or 4 shares in this company with a total value of £170.49, up a little under £8 or just under 5%, which again, nice way to round off. So if you look at through my positions, most of them are currently netting me a positive rate of return, all barring AT&T, the iShares Global Clean Energy, and Pfizer. And Starbucks looks like it's just about to dip into negative, but we'll try and finish the video before that happens. One thing we'll always do is we'll hop across and have a look at the dividends over here. You can see that July has been a fairly, well, it's not been too much of a quiet month, I guess. We've received a dividend from GSK, a position which I've sold out of. Realty Income, as I said, of around £1.14, £1.15. Coca-Cola of £2, Shell of £2.41, and then Nvidia, a massive 3p. That gives me a total dividend right now of £174 exactly, which, as we've said, isn't too bad for a portfolio that holds a lot of growth companies here, as well as some dividend payers, I guess, but there's lots of growth here within the portfolio. So for those of you who've seen my overall portfolio updates before, you'll recognise this kind of screen here. It shows all of my different accounts, my Vanguard, Trading 212 and Coinbase. I won't show you too much now because I'll save that for a future video. But what I've done is I've added a Trading 212 free shares for referrals over here. And what that does is any money that I put in there will add on to the overall cash that I've invested into this portfolio, which will then change this massively overinflated return on investment percentage. It will also impact the Trading 212 dividend return on investment on capital invested. Because this money will go in as if I'd invested it myself. So what we'll do then is we'll come across here and we'll look at the total account value, which is currently £5,514, £5,515 even and a penny. We'll move back across here and we'll add that in down here, so £5,515 and a penny. We'll also add the dividends in so far that I've received this month, which is £6.51. And what that will do is it will give me an overall return at the moment of 82%, which of course isn't correct. And that's because we haven't put in the free shares that I've received over here as cash. Once we put that in, you'll see that the overall dividend return on investment on capital has decreased. And you'll see that my actual return on investment has dropped to 33.29%, which is absolutely exceptional. If we come back across and have a look at the actual portfolio, it shows that my return is just under 28%. And as I said at the beginning of the video, that doesn't factor in dividend income. It doesn't factor in any investments that I've sold, which have either returned or lost me money. So this number over here, this 33.29%, is factually correct. And that is my cash on cash return investment. From the cash I've invested of just over £4,137, I've seen a 33.29% return. So I'm finishing this video then. My portfolio is valued at £5,515 exactly, doing very, very well at the moment, largely due to companies like Nvidia, Tesla, Microsoft, Apple, kind of all the tech stocks really. But hopefully that continues. If you've enjoyed this video, please don't forget to drop a like on it and drop a comment down below as to how your Trading 212 portfolio is doing. And remember, if you haven't started investing in Trading 212 yet, grab your free share using the link below, which can be valued up to £100. If you want to track the development of my Trading 212 portfolio over time, check out this playlist here, which includes every single one of my Trading 212 updates from when it was valued right back at around £500 to where it is now at £5,500. A large change in a relatively short period of time. If you don't fancy that one, check out my latest Vanguard update, which is just set up here, which has breached £17,000 now. I'll see you in one of them.